day all. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 22nd of December, 2020, and we're about 6:30 p.m. You know, the president signed the stopgap bill, so in other words, we have funding through September of next year. He went for the $1.4 trillion to sign that. I don't know why I haven't seen anything that he hadn't yet signed the COVID-19 relief bill. I'm sure he will, but I don't get why he hasn't signed it. The marketplace, well, it's not so far too worried about it, but it was a down day. Dollar super strong. Metals got chopped up. When I looked at the API numbers that came out at 3:30 today, we get the EIA in the morning. Wow, you were down in the, you had a build of 3 million barrels in the API number, and yet the EIA is looking for about that reduction. These numbers aren't getting along with each other. Bonds and notes still getting a bit of a bid here. So where are we? It is so important that you understand. You're going to get a lot of financial data tomorrow. And then we have a half day of trading on Thursday where you close at noon. Markets won't reopen until Sunday night around the world. Traders, and this is not just the U.S., this is Christmas, so it's around the world. People are not going to be trading. Why are you trying to make something out of nothing is what I always tell people. Then we're going to go through that same event again next week. And after the first week of January, the season kicks in. Now you're going to say, why is he saying after the first? Think of what I'm about to tell you. A lot of people, whether you believe it or not, are going to go away to visit families and the like. Then they got to travel back after the first of the year. They'll get settled in. Got to get the kids ready to get back to school. It's just a week where a lot doesn't go on. And I know you're going to tell me COVID has changed all that. Nonsense. There's 1 million people a day traveling just by planes right now. What's going to happen with the car traffic? And people that didn't spend their time with families on Thanksgiving, they're probably pretty fed up. I know the government campaign is for you to stay home, and the government is right. But I also know people, and a lot of them are going to go out. Wear masks. That's all I can tell you. So, in looking at the markets, I think it's an evening up cycle right now. You'll say to me, what about the Santa Claus rally? I want to explain that. The Santa Claus rally goes into the year. First of all, Christmas isn't a day. It's how many how many days of Christmas? Was it 12? You know, on the first day of Christmas, and it keeps going on, right? So there's more days. That's my point. Remember that as a kid. I used to sing it in school. I loved it. Okay, so on the S&P as we're here, we're down 55 points tonight. We're in a correction on a week, not tonight, but 55 for the week. I said that wrong, from close to where the market is right at this point. Okay. When you look at the chart here, you can see that the chart had this monster spike down. And when you get that, it's like the destruction of everything and the market's got to rebuild itself. Think of it that way. That wasn't just an aberration in the market. It's also not necessarily the start of a big trend one way or the other. It took the bulls out of the market, and that makes sense. So traders, they said to themselves, I'm through until we get back after Christmas. If you don't believe that's the case, owning a brokerage firm, I've owned them now for 1980s. I'm telling you that that's how it basically works. And that's what you see in these markets, okay? You don't have to believe me. It's something I've seen, and I'm sharing my experience. I don't care if you think I'm wrong, and I don't care if I'm wrong. I know what I see. You're stuck at the neutral zone. What is the neutral zone on a chart? The 18-day average of closes. That's what I believe. That's what I teach. You might say it's the 20. Some people use the 21. You're splitting hairs. When you get 21 days versus 18, the numbers are off teensy bits. They're not much more. And that's the battleground the market's at. It's resting. What about the Bollinger Bands? Well, you hit the upper and lower band. What can I tell you? And you're forming a sideways pattern in the market. Very typical of a pause. Do I think the overall trend is over? Not at all. Do I think the market's in a pause? Absolutely. When we come and we take a look at the slow stochastic study, pointing down and just getting present tense out of being overbought. It can go for more sideways action here. What about the Nasdaq? Still bullish. Different pattern. Higher lows, higher highs. Embedded reading, that's when the two numbers that make up the slow stochastic are going sideways over 80. Target, if it can continue going up and not lose that rate number, is the upper Bollinger Band, 12,826 and a fraction right now. In the Dow, we have a pattern of a higher high and a lower low. Again, no trend. Sideways action all of a sudden, churning, and a market that's still in an overbought condition that's trying to correct it. Last, another strong market, which is the Russell. So we can see that it's the Nasdaq and the Russell that are the two powerhouses. This market also had one of these monster days, if you will, with it, but it didn't have an outside day. I don't believe it did. If we come here, might have. This stays high. Yeah, it did. 1990.40, 1992.20. So there's your outside day. The swing line is pointing up, and it goes to that line because you closed higher on the day. That's what I couldn't tell right there. And now you're here. You can also tell if you're watching this, I have no interest in these markets right now. I, as a trade advisor, if you would call me that, or a chart advisor, if you'd call me that, think that when you get into this type of Christmas play, you step back. If the market continues up, the upper Bollinger Band, if it loses the reading, back to the 18-day average, I'll let somebody else have all the fun with that. In the VIX, notice how that flare-up in the VIX immediately back under the Bollinger Band 100-day average. It was a one-off event. That's what this market is telling you. This market is also telling you, nah, people aren't running for that insurance. They don't think this is a serious break right now happening in the market. In the T-bond market, the trend is back up. Higher lows, higher highs, until you take out 172.14, the trend is up. Maybe it gets to the upper Bollinger Band over time. These markets are going to have a hard time this year if the economies of the world pick up. They'll want to break, not rally. But they're getting a bid because we still don't understand the effect of this mutant COVID-19 part. We think we understand it. Well, we don't, but Moderna thinks they do, and Pfizer BioNTech. Let's see how the tests come out, but the market's giving a small bid. It's really hanging around the 18-day average. If you're trying to make something out of nothing, have a great time with it. The 10-year note in an uptrend. This morning, when I did my update, I was telling traders as we were sitting right on the 18-day average. And I said, this is where the pros are buying the market. They'll probably have stops under 137.23 and see what they can get a pop for. What was the risk? $60, $65, something like that in real money. Okay, and that's not a bad little move from there. You've already got quite a bit made up from that, but we'll see what goes with the chart. Dollar index, you've lost the embedded reading. You might go back to that 18-day average to fight a battle there. Why? When you lost the embedded reading, you had already hit that high. It wasn't lost. You lost it today, not yesterday, so it can get back to that number. I don't care. The trend is done here. This downtrend was broken when you had this day up and got there, and now it's confirmed by losing the embedded reading. All I do is go, hi, I can walk away from a market like that. Eurocurrency, you lost your bullish embedded reading. You lost your, look at this, right here, you lost your embedded reading, and you're keeping it lost in early trading. I wouldn't be surprised if you slip back to the 18-day average to regroup, and in the pound, who knows what they're doing there. They're fighting now about, from what I can see, a 5% difference between what the Brits have offered. They want a 30% reduction in the fishing rights for a certain amount of years that its European Union partners are getting, and the European Union wants to give them a 25% reduction, but it's more than that because the Brits want, if the treaty's broken for any reason, the fish are the products that get the tariffed on, whereas the union is saying to them, it's everything. It'll be a whole slew of goods. So the two sides fight. Do I think a deal will happen? As I told you, I'm probably the last person in the world that thinks it, but yes, I still think a deal is going to be begrudgingly worked out by the two sides. Everybody will be unhappy, but they're all better off with the deal than no deal. Now, when I look at these crazy markets right now, what do you think I would tell my clients if you were me? I'd tell them, run next year and learn, if you're going to trade the stock indices, build positions using these mini stock indices. Why? They're 1/10 the size, 1/10 the risk, and admittedly, 1/10 the same profit. But who says you have to trade one? Risk tolerance and how you react to risk is so darn important. And when people take a plunge all in and it goes against them, they become tick crazy. Oh, the market's going against me. Instead of smoothing that out, you're not as quick as the algorithm traders are. Don't think you are, you're not. The algo's as quick as another algo, and then they fight for the space on the phone lines or whatever communication device to get their orders in quicker. Understand how the game works. So for somebody like a retail client, and that's most of the people that watch me, yeah, that's where I'd be headed. And that's where I'd be working at a $1 a side commission. Come on. If you can't cover your $1 a side, why even looking at these videos, right? So you build a full-size contract for $10. Big deal. I think the peace of mind of not being all those 10 contracts, think about it, the 10 minis at one price, for a number of you, might be good advice. For all of you, certainly not. I don't know each one's financial circumstances. The person that has X amount in his account that's large versus a smaller trader, the small guy can play this the same way. Yeah, you're not trying to take, please understand this, 10,000 and make $1 million. That's the dream. I wish you the best. That is not reality anywhere. The lottery might be it, but that's not the reality. I'm not talking returns. You put 10,000 in, I'm hoping you don't lose more than your 10,000. Games go both ways. But when people say, well, what can I make? I always crack up. I don't know. First of all, that's why I don't manage money. I don't want to be in that. I don't want that phone call. I want to watch the chart, tell my brokers what's going on, and away you go. And I tell all of them, tell their clients to move to these markets. It is such a better vehicle overall for the type of client we attract, which is a retail client. I'm Ira Epstein. You can go here to find out about it. Remember, it's after our name, put /micro. Talk to you tomorrow.